My name is Andrew Stotz from the Valuation Masterclass, and we have another student presentation. This time, the company is Costco. Are you ready to go?
Yes.
Okay, let me share the screen and get the presentation up there. Perfect. Everything looks good. So I'm going to exit now, and then you just start. You ready?
All right.
Okay, I'm going to exit now.
Hi everyone, I'm Medha Agrawal and today I'm going to be presenting my research report on Costco. I initiate coverage on Costco with a sell recommendation based on a target price of 578 US dollars, implying a downside of 36%. I derived this target price from a DCF based valuation using a WACC of 7.4% and a terminal growth rate of 3%. As you can see in the graph on the on the bottom right corner, Costco has seen a steep increase in its stock price, which is very unusual for a stock in the consumer staples industry. With that, what are the highlights for this? Costco expects a worsening gross margin with low margin activities. Its revenues, though rising, are expected to see a slow climb, and it expands by adding 25 to 35 warehouses annually. On the flip side, its risks are that competitors like Walmart, its dependence on US and California, low memberships due to fee increases, and the possibility of losing in legal proceedings. So let's get started and dive right into the story of the overvalued stock of a consistent growth company. Now, what does Costco do exactly? It is a membership warehouse club headquartered in the US and functioning in other countries like Canada, UK, Australia, etc. It sells memberships for both individuals and businesses for buying food and non food retail items, while its secondary businesses include gasoline, pharmacy, e commerce, travel, etc., and is also known for its Kirkland signature brand. It's the second largest retailer globally with an 8% market share in the US. Talking about the stories, Costco is expecting a worsening gross margin because of its increasing investment in activities that are associated with a lower gross margin in its business. For example, the gasoline business has grown consistently from 692 gas stations in 2021 to 719 gas stations by the end of 2023, and these have a lower gross margin. For the e-commerce business, which too has a lower gross margin, it has been expanding. In fact, even for opening new warehouses in the US, even that would lead to lower initial operating profitability as well as cannibalization of sales at its existing outlets. Because of this, I expect a gradual decrease to 11.5% in 2029 for the gross margin. Secondly, revenues, though rising, are expected to see a slow climb. Effective September 1st, 2024, Costco has announced an increase in its annual membership fee from $60 to $65 in normal memberships and $120 to $130 in executive memberships, which will impact 52 million members. They've also increased the annual 2% reward limit from 1,000 to 1,250. However, this will probably not be enough to compensate. Uh, it also derives 12% of its net sales, up from 9% in 2021, from gasoline. And, and its gasoline business also enhances traffic in its warehouses, leading to greater sales. Considering all of this, I expect the revenues to increase in the 7 to 9% range, which is slightly conservative. Thirdly, Costco expands by adding 25 to 35 warehouses annually. In 2024, they spent 4,700 million US dollars on capital expenditures and expect to do the same for the year 2025, opening 29 additional warehouses, including 3 relocations. Let's dive a bit more into the industry. It is a steady growth industry despite the changing tides. So, the food and staple sector consists of production, distribution, and retailing through grocery stores, supermarkets, etc. As you can see with the graph on the right, Walmart leads the industry with a market share of 21%, followed by companies like Costco, Kroger, Albertsons, and others. The global market size for this industry is growing from $58 billion in 2022 to an estimated 93 billion US dollars in 2030, which gives us a CAGR of 7%. E-commerce is one major factor that's expected to enhance the sales growth in this sector, growing to a $67.1 trillion market. 23% of all retail purchases are expected to take place online by 2027, and personalized recommendations are expected to increase this by 10% more, which is also shown in the graph on the right. Uh, but but on the other hand, rising energy costs also threaten margins in this sector. In fact, in the UK, 60% of retailers view energy costs as the main risk to their margins, and 22% even fear insolvency because of it. Their increase of 21% in 2022 in operating costs is mainly due to energy concerns. For Costco, the latest quarterly report showed a 4% YOY increase in gross profit and a 9.4% YOY increase in EBIT. Uh, However, in latest news, Costco missed the market expectations by only delivering a 5% rise in revenues. It also increased its annual membership fee, as I talked about earlier, with a simultaneous increase in its annual 2% reward maximum limit. Despite this, Costco saw a 9% YOY increase in sales in the month of September 2024, but this is solely due to abnormal consumer activities, which happened due to port strikes and the Hurricane Helene, and this is not a trend that's expected to continue. As for consensus estimates, I found that all 38 analysts suggest to either hold or buy the stock, with 37% being hold recommendations. The target price indicates a 2.2% upside, with a fluctuating revenue growth rate and a gross margin that's also that they too expect to fall to 11.5%. Since we saw that the net sales increased by only 5%, which is way below market expectations for Costco, let's dive a bit deeper into where it gets its revenue from. Costco derives 40% revenue from food and sundries, 25% from non-foods, 14% from fresh foods, warehouse ancillary and other businesses contribute 20%, and 2% is contributed from memberships. By region, US contributes the majority at 72%, followed by Canada at 14%, and all other countries together contribute 14% to revenues of Costco. Let's now compare Costco against 1810 non-financial companies in the USA specifically. For fundamentals, Costco ranks in the top 20%, in the top 10% due to efficiency in generating returns. Its valuation is in the bottom 30% due to its extremely high PE ratio. In momentum, it ranks in the top 30% due to high growth in all three metrics, and for risk, it measures at an average. Comparing against 540 large consumer staples companies worldwide, Costco ranks in the top 20 to 30% for profitable growth. This is majorly derived from its great profitability, ranking in the top 20%, while there is room for improvement in growth, which ranks at 50, which ranks at top 50% currently. Its profitability is derived mainly from its asset efficiency and its growth mainly from revenue growth, while its expense control and expense direction are a cause of concern currently. Uh, let's look at the actual and forecasted financials for Costco. For revenue, we see a slow growth, a slow, however, consistent growth, as well as for net profit. For its balance sheet, we see the increase in net fixed assets, showing the capability of the company to grow and expand. For liabilities, I'd just like to highlight that it consistently keeps its long-term debt at around 7,000 million US dollars, except in the year 2027, where $2,000 million worth of debt is maturing, so it is shown in short-term loans. For the cash flow estimates, here we can see the capital expenditures, which consistently help the company add 25 to 35 warehouses per year, leading to as well as a consistent dividend, except in the year 2024, where it declared a special dividend. For ratios, we look at majorly the consistent current ratio, the gross profit margin declining, as well as the declining liabilities to assets ratio. Here we can see a more or less consistent net profit margin, though it has had slight decreases. For free cash flow, this is where I show you my estimation of FCFF and FCFE. Let's also talk about the relative valuation of Costco. Its PB ratio has shown that it is overvalued compared to all other companies, compared to the average of all other companies. In its PB ratio, too, it is overvalued, while its ROE is more or less in line with the average in other markets. For its peg ratio, the numbers are inconsistent. However, we can look at the PE ratio, which shows that Costco is overvalued with an EPS growth that is also above average. Let's now understand how I derive the valuation, the DCF valuation, and the end target price. I took a cost of equity of 8.6%, a cost of debt of 2.3%, leading me to a weighted average cost of capital of 7.4%, which hence led me to deriving the equity value per share of 578 per share. Uh, for the sensitivity analysis, I'd just like to highlight how the share price remains in the $460 to $700 range, which even despite the fluctuations in the assumptions, shows that Costco is an overvalued stock, and it would be better to expect Costco to correct to the market trends that are seen in the rest of the industry. Lastly, I'll talk to you about the risks. Costco faces a really tough competition from other competitors like Walmart, which dominate the market. Especially Walmart, which has a 21% market share, and besides that, Kroger, Target, Albertsons, Amazon, BJ's Wholesale Club all pose significant competition. The second major cause of concern is its heavy reliance on California, since a major share, which is 19.5%, comes from the single US state of California, a number which is larger than the 13% revenues coming from Canada and the 14% revenues coming from all other international countries. Another cause of concern is the lower memberships, as well as the possibilities of losing in cases related to labor laws and privacy law violations. And hence, I hope I've been able to convince you about the story of Costco as an overvalued stock of a consistent growth company. Thank you.
Excellent. Okay, let's go through some questions. First question comes from Ashwin, and he says, with the high momentum, what catalyst would cause the stock to fall?
All right. Even though there is a high momentum for the stock currently, the idea is that as it grows further, its gross profit margin is going to fall down because of its increasing investment in activities which have a lower gross profit margin than is average for its business currently. Secondly, we even in the last annual report, we saw a lower revenue growth, and that is a trend that might even get amplified because of its higher membership fees now.
Another question is about, how do you see inflation affecting Costco's ability to attract and retain members, and what strategies do you think the company is implementing to support its customers during tough economic times?
So inflation, I believe, is going to be a concern for its customers, although the way that Costco is helping its customers get through that is Costco's major USPs is that it gives the it gives the products at lower prices. Even its own private label brand, it sells at lower prices than is average in the market.
And another question from Zishan, company is best in fundamentals as per FVMR. Why sell? Also falling in 20% top companies worldwide. Why'd sell?
I don't say that Costco is a bad company. I only say that Costco is extremely overvalued. It is a stock can be a great company, but it can still be a bad investment at this point of time.
And Moment said, I see that 14 analysts are recommending hold. Do you think they're just shy, or they're under pressure that they can't go and put a sell?
While I don't really know what's going on in their minds, I do think that that might be a reason that they're not. That's why they're not able to go for a sell, because they too are predicting decreasing gross margins, and they too are predicting like a slow rise in the revenues.
So how does it feel to graduate from the Valuation Masterclass Bootcamp?
It feels amazing. It, it was a pretty hard journey getting here, so I'm really happy that I managed to do it.
And how would you describe the transformation that you went through?
Well, I didn't really know anything about analyzing companies, and now I found that I really enjoy this. I really enjoy analyzing industries, analyzing companies, finding out more about them in detail.
Yeah, isn't it fun? I mean, like when you get a new company and you look at it and you're like, I'm gonna learn everything I can about this company. You only had,
Exactly.
5 weeks to do that, but a real analyst has, years that they're working on these companies. So I thought your presentation was great.
Thank you.
All right. Well, I'm gonna take you out of this and then we'll talk in just a minute. So hang on.
All right.
All right. Well, she's a brave young lady. She called a sell on Costco when the other analysts don't have the guts to do it. That's the kind of analysts that we're creating in Valuation Masterclass Bootcamp, where they're confident with their valuation and they're willing to stand behind it and talk about what their conclusions are. And they're not influenced, luckily, by any factors. If you want to build a competitive advantage in company valuation, join us